Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this recap video, I want to go over an amazing day trade, initially a swing trade that we executed yesterday on Friday. We placed this trade on ticker symbol IWM, the small cap index ETF, or commonly referred to as the Russell 2000. So as seen on the daily time frame, IWM on the daily time frame has fared a lot better on the current intermittent downtrend that we've witnessed so far. And for the past 2 days, we saw an incredible bounce back from this pullback's lows. And if you compare the benchmark of markets or SPY to IWM, there's clearly a difference on the relative strength of the price action, the price trend, and an observational difference on the depth of this intermittent pullback. Now, before I delve in further, if you guys haven't watched one of my recent videos on why the stock market won't crash, make sure to watch it. It will pop up on the top right corner of your screen, or you can just click on the link down below. Now that video from 2.5 weeks ago tells you why the stock market hasn't crashed and instead experienced an intermittent pullback. Alright, so first of all, IWM is almost making a daily bull flag here as the overall markets began its consolidation and pullback about 2.5 weeks ago. So here is the flag pull, which is consisted of this amazing rally that we had from December lows. And then here is our flag with its descending level of resistance, which will be very important here in a few minutes. And so this bounce action that we got from Thursday began to continue on Friday, and that's when we decided to join. And so if you take a look at the 2-hour time frame, we have made a micro double bottom inside this macro bull flag that stopped this intermittent pullback from gaining more ground. So we have our first bottom over here on the left, and then we have our second bottom to the right. And so this chart pattern was confirmed on Friday when we continued to reverse off of Thursday's lows at 186.13. And as we continued to blast through Thursday's highs, which was at 189.30. And so the continuation of the bounce led us straight to this daily whole number level of 190. And you can clearly tell that this level, this daily level, is being respected on this intraday 2-hour time frame. Now, I knew we had to get in at the break of this resistance level if we were to participate in this reversal. So this is where we got in. Let's go ahead and go to my favorite intraday time frame, the 15-minute time frame. And that, as seen by this screenshot from the private CFO Discord, I sent in this message at 8:22 a.m. saying IWM swing trade for 191 strike call contracts that expire on March 6th. And then as a few minutes went by, at 9 o'clock a.m. on the dot, Pacific Standard Time, I said take profits off at 75% plus. And our contracts went from $53 to $93. And so if you translate those specific timestamps to the arrows showing here on the 15-minute time frame, you can see that we clearly entered at the candlestick pointed by the green arrow, and we exited at the candlestick pointed by the red arrow. And so I personally got in as the price was hitting around 189.75-ish. And then I exited as the price was hitting around 190.85-ish. And this was how we achieved that 75% plus gain as we rode this momentum break higher. Now, here are a few takeaways from this day trade. So my initial target was 191.65, which I told my members. But I was skeptical of this huge bounce as we were getting pretty overextended and overbought on nearly all intraday time frames. And because of that live risk assessment I conducted, I decided to get out as the price began to reach and retest another whole number level, the 191 level. And so obviously I got out right before we hit that 191 level. And so this 191 resistance level was significant on the intraday time frame as seen here on the 2-hour or even on the 15-minute time frame. It was used as support multiple times in the past as we began to stall from the huge rally off of December lows. So I decided to play it safe and lock in my amazing gains of 75% plus and not risk the fact that the price could reject this 191 area as it turned it into a new resistance from an old support. And after I got out, I did begin to see that there was some resistance building up and forming. But we continued to make higher lows with very, very tight price action right underneath this 191 resistance level, which eventually led to another leg up higher. And this allowed IWM to reach a new high of the day at 191.92, which reached and surpassed my initial price target of 191.65. And that is also the reason why this was sent in initially as a swing trade. I had no idea that the markets would continue to stay overbought and overextend itself like it did on Friday. So after this happened, I let the members know this. I said, looking back, I definitely could have held until 175% plus for gains to close out at highs, but it was still really a good day trade. I had to say that for two reasons. Number one, we can't FOMO on missed gains, especially when you already had massive gains like 75% plus. And that is what curates greed in the stock market. If you are already out, you are out. That's it. That's the reality. I had 75% plus gains on a single day trade. That's enough for me, even if I could have added another 100% gain on top of that 75% gain. Sure, I can feel salty, but what good will it do for me to carry on that FOMO and greed to the next trade? Something to think about if you do that. And finally, number 2, there is still an opportunity left on this name, as there are always multiple opportunities in the same ticker. Now, remember the descending level of resistance that I talked about right as the video started? Well, we're still conforming to that level as we speak. We know this because Friday's high was our second retest of this descending resistance trend line. We have our first one right here, okay, in this area, and our second one on Friday over here. And so if we get a third retest, we will get our final confirmation that we are in a reversal back to the upside, and we can definitely swing this small cap index ETF. I am looking for a small intraday bull flag to form right underneath this descending level of resistance that you can see on the daily time frame as well. So somewhere around here, I want to see a nice bull flag like this forming. Plus, if you go back on the daily time frame, we have remounted above both of the daily momentum 10 and 21 SMAs thanks to Friday's close to end the week. The red oscillating line is my 10 and the light blue oscillating line is my 21. So a possible future entry is going to be over 192 for all of my members and for me. And let me know if you guys decide to take the same trade. I will take it with you all. All right, that is it for this video. If you liked what you heard, please leave a thumbs up down below. And if you're new here, check out the description box below for the link to the CFO Swinger Watch newsletter. You can gain access to the current swing trades that we have right now and much more. Also, make sure you guys check out the other recap videos to continue your learning in day trading or swing trading. Thank you for watching, and I will see you all on another video.